This is Eyewitness News, the news leader, with Lori Stokes and Ken Rosado and Bill Evans with the exclusive AccuWeather forecast. Now, Eyewitness News this morning.
All right, Carolina, thank you. Well, joining us with some advice on how to protect your money and also your investments during these economic troubling times is financial analyst Richard Bregman.
Good morning.
Good morning, Richard.
Good morning. How are you? Good morning.
We're doing all right, hanging in there.
Busy time for
That's
you.
right,
Busy
absolutely.
time.
And of course, you know, so many people are wondering many things. First, the question, and we do have people can write to 7 online for their questions. In raising the FDIC limit, this is one of the questions. A good thing. Is that a good thing overall for everyone? Does everyone benefit from something like that?
I think it's a good thing for everyone. I do. First of all, it will allow people to have 2.5 times as much money protected in the bank. So that's good. That's number one. Number two, the banks will have money in them. People will not be as inclined to take the money out of the banks, and the banks need money at this point in time with this whole credit crisis going on. And third, I think it sends a signal to the public that the government is willing to step in. They were already prepared to insure 100,000. Now they're prepared to insure 250,000. That's a lot more
huge.
money across the economy, and that's a nice sign of confidence, I think, for people to see.
How concerned should the individual be about their own personal credit score, credit rating at this point?
At this point, they should be as concerned as they ever have been. You should always be concerned with your credit rating and your score. And now that credit is much tighter, you really need to be diligent in maintaining your credit rating.
And sometimes I would imagine even if your credit is pristine in this economic time, even if you're trying to get, say, a mortgage, it's extremely difficult, even if your points are high.
It's much more difficult because the lenders are much more reluctant to lend, and also they might not lend as much money against the home because home values have been declining, and they want to maintain that margin of safety.
We've seen, it's been nice, though, I guess, for us to at least see the bump that we started to see yesterday on Wall Street.
That's always a nice thing.
Right? What is it, the cautious, what is it that Greenspan had said sometime, the exuberance or
Irrational
whatever.
exuberance?
Exactly.
Yeah, I don't know that anybody's irrationally exuberant right now.
No, not by
But there
any
are
means.
always opportunities. There are, even in the midst of what seems to be terrible times on the market. Yeah.
Right.
All right, Richard Bregman, we thank you for joining us, and we will see you again at 6:30, answering more questions that people are going to write in at 7
I'll be there then. Thank you.
All right, thank you.
Thank you, Richard.
Eyewitness News.
Thank you, Carolina. And joining us now with some advice on how to protect your money and investments during the economic crisis is financial analyst Richard Bregman. Richard, good morning. Thanks for being back with us. And we got some questions emailed into us on 7online.com. The first, is there any way to tell how long it's going to take for the 401ks that everyone has to recover?
There's no way to tell for sure. It depends a lot on how you've invested in the 401k. If you have investments that are tied to the stock market, meaning you're in mutual funds that are stock mutual funds, it's going to take as long as the market takes to recover, and there's no way to know for sure how long the market will take. If you're in something more conservative, like a bond fund or cash, then you probably have not been very hurt, so to speak, in this mess anyway, and you're okay at this point.
So following up on what you were just saying, then, should you change from the stock market to something that's less risky?
Perhaps. It depends on your individual circumstances. The most important thing of always is to understand the consequences of making that type of change. We're in the middle of a very turbulent time right now. If you make a change out of stocks into something less risky, you have to understand the consequence, which might be you miss a rebound when it comes. So you have to be aware of that. At the same time, if you feel you need to be more conservative, make the change, but know where you are and understand the consequences of doing it.
You have a family of 4 at home to feed. You might want to not want to be that risky with your money.
That's correct. You really have to understand for yourself what your priorities are. That's correct.
Cause for even just changing mentally how if you have traditionally been rather aggressive in your investments, it is a real mental change to be more conservative, at least for now, perhaps.
That's correct. The real key is always be prepared. We're in the middle of turbulence right now. There's not much that you can do if you're not prepared for it. You just have to get through it. And if you're an aggressive investor, this is a time when you're going to see lower balances in your 401k plan for sure. You're going to need to wait for the market to rebound with that strategy.
Put on your life vest.
Put on your life vest. That's it exactly. That is it exactly.
On the runway.
Financial analyst Richard Bregman, we thank you so much for joining us.
Thank you so much.
Much
Pleasure to be
appreciated.
here.
All right. Well,